Hello, chart watchers, and welcome to this Thursday, March 29th, Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. You picked a great one to join us on, and for our regulars, welcome back. You can see today the market is having a nice day, bouncing. The NASDAQ up 84 points, and the Russell 2000 also moving higher, up 17 and performing quite well, gaining more than 1%. As you can see across the board, we're doing that on each of the major indices. The 10-year Treasury yield is down again today, 2 basis points to 2.75. This could mark the third consecutive day, closing below that 2.80 level where we had support during the trading range that we've talked about on many occasions. The volatility index dropping considerably today, down 13%, back below 20. And another move down below that key 1617 area, I think, would be very bullish for the market. XLE is on the move to the upside, holding on to this multiple low support area around this 66 area. We've tested it on many occasions here over the last 5-6 weeks, and we are bouncing off of it once again. Technology also having a nice day today, bouncing back off of very, very weak action, as we can see over most of the last couple of weeks. Internet stocks, that's the primary reason why we're seeing strength in technology. You can see that the internet stocks are up 48 points, which is more than 3% on that index, and we haven't seen a day like this on internets in a while, so it's certainly lifting the market spirit. The distillers and vintners having a very strong day, about to break out, and the primary reason is that Constellation Brands came out with a very strong earnings report. You can see gapped right up near its resistance level and is just trading mostly sideways there right now. And the best performer in the S&P 500, PVH Corp. This is actually another earnings-related story here where they did beat top line and bottom line, and PVH, you can see up $7. And again, on a percentage basis, at least as of 15 minutes ago, was the top performer in the S&P 500. And with that, let me bring in my co-host, Erin. How are you doing this day before Good Friday, Erin?
Oh, I know. I can't believe it. Vacation tomorrow. I'm very excited. I get 3 days. You're going to be gone a little bit longer than that, but
Yes.
I'll take it. I'll take a Friday any day of the week. Well, on Fridays is always the best. Any day of the week.
Yeah,
It's morning here on the West Coast. Just a reminder.
Yes, it is, and I am heading first thing in the morning. Probably about 4 a.m. I'm getting in the car and heading down toward Disney World. Going to spend some time there, and of course, going to be playing some golf. The timing is perfect because I'm going to make a call. I made a call earlier in my blog that I think the bottom is in. I'm putting my money where. So if I'm wrong, I don't really have to deal with anyone. I can just disappear quietly. If we go back to new lows. We got a great show, and we got Arthur Hill with us today. Art, how are you doing?
Well, he was here.
I am here.
There we go.
I know.
I'm doing very good, very good. We've got a glorious day heading into the Easter weekend. So, yeah, doing real good.
Yeah, do you get into, now, of course, it's not until next weekend, but do you watch the Masters at all? Do you get into that?
No, I do follow it. Probably not until Sunday, though.
Okay, you wait till that.
Wait till it gets exciting, kind of thing.
Yeah, the final 9 holes. See, I find it very exciting, but I understand people who, anyone who looks at golf and says, "How can you sit there and watch that on TV?" Makes it fun for me anyway, watching these guys. But anyhow, we're going to hear from you. I know you've got some stuff prepared for us, and we're going to get back to you in about 10 minutes, if that's okay, Art.
That sounds great.
Awesome. And so I'm going to turn it back to Erin for our announcements and our agenda today.
Yes. So tomorrow, as we've been saying, there is no, the market is closed, and so we will be off for Market Watchers Live. No show tomorrow. And next week, it's going to be pretty interesting. We have the launch on April 2nd of Stock Charts TV, 24/7 content for you on Stock Charts. So you'll want to check that out. And then our first female guest. I'm so excited. Mary Ellen McConaughey will be here on Wednesday to talk to us about her style of trading. And then we have Bruce Fraser, Mr. Wyckoff, coming in on Thursday. So next week will be great. I'm sorry you're not here, Tom, for that, but it's going to be a great week.
I'll be okay.
Today's agenda, we are going to start with Arthur, of course. He's going to come on and give us some interesting information about the markets. Then, Tom, you're going to give us a seasonality report now that it's the end of the month and give us an idea of what to expect next month. 10 and 10 to 1, our very first stock symbol will be Rayonier Advanced Materials, RYAM. So if you want to go take a look at that chart and make some notes. And then finally, we have a mystery guest that will be coming on at the end of the show. So you'll have to wait to find out who that is. But I know you'll be very excited about it. So stick around. And with that, I'm going to turn it back to you, Tom, for some technical news.
All right. Just want to go over a couple things. Treasury yield. We are down again today, which is a little surprising because the market's up. You'd think money would be rotating out of bonds and sending the yield a little bit higher. But bond market, there's still obviously some folks that are a little nervous and seeking some safety. So we do see the yield down a little bit today, a couple of basis points. Initial jobless claims came out this morning, 215,000 versus expected 229,000. February personal income rose 0.4%, and that is exactly what the market was expecting. Personal spending rose 0.2%. Also exactly what the market was expecting. And then we had the Chicago PMI, which came out, and that came in, and that was at 9:45 this morning, so 15 minutes after the market opened. And it was disappointing, 57.4. The market was looking for 62.8. So that was a pretty big drop. And then at 10 a.m., we had consumer sentiment, which was slightly below expectations at 101.4 versus 102. So that may have some of the folks moving into the bond market, some of the disappointment there. But I thought the initial jobless claims at 215,000 was a really, really positive number for the market. And so you can see the result at this point is that the 10-year Treasury yield has broken down below that 2.80%. Think that we talked about this yesterday. I think it dropped down to 2.7 or so. Would not be a horrible thing for the stock market. I think that would just be a typical test of that rising 20-week moving average, which we saw several times in the fourth quarter of 2017. But after that huge move up in yields earlier in 2018, this would be the first 20-week test in 2018 if, in fact, we do get this. I wanted to mention from my blog article, I did talk about the and we had Mark Young on yesterday talking about sentiment, and I think from a sentiment perspective, it would really make sense for the market to bottom. In my blog, but I'll go ahead and pull it up here. You can see this is a 5-year weekly chart on the NASDAQ 100, the NDX, and I also marked down here on the bottom the VXN, which is the volatility index for the NASDAQ 100. And you can see anytime that we've gone essentially through this 30 level during this bull market, we've essentially marked a bottom. And you can see it here back in October of 2014. We also did it in 2015, 2016. We did it on a couple of occasions there. And we've done it a couple of times here in 2018. But that's why I'm looking for potentially a move back to the upside. You also can see from this chart that we do have a NASDAQ 100 double bottom, or almost a double bottom, back down to that low close, weekly close anyway, that we saw back earlier in why we are topping. If you look at the NASDAQ on a daily basis and look at the VXN right here, look at that long tail to the upside, meaning that during the day, there was a lot of fear that was creeping in to the NASDAQ 100, and we saw obviously a big move down in the NASDAQ 100 itself. But that reversal in fear could be very similar. It looks very similar to these tails that we saw back here at the beginning of March, and that, of course, led to this huge rally. So I'm thinking that the bottom is in, and I did actually draw what could be, we'll have to wait to see whether or not this develops, but this is the same slope on these lines, and it could be that this is a channel now. actually move higher from here, and whether or not that low yesterday holds. I wanted to mention a few individual stocks that look kind of interesting. I know Arthur will have some interesting stocks for you later in his presentation, but I wanted to go through just a few quickly. Amazon, been in the news a lot, but look at these moves down here and the long tails to the downside. That's telling you that there is some buying, even though the stock has been getting hit hard the last couple of days. There is buying in the afternoons. It is being held up. And the other thing I think that's really interesting on Amazon is if you look at a weekly chart, this selling has actually taken us down to the 20-week moving average. And you can see over the last few years, you don't get too many opportunities on Amazon at that 20-week moving average. So I think this is an interesting level here. Netflix had a negative divergence on the daily chart. You can see the higher prices and the much lower PPO. I look for a 50-day test after that. We're getting that today, potentially with a hammer. We'll see how Netflix finishes today. Boeing, I've talked about this one in the past. I loved it. If we could get down into that mid 300 area, look at that hammer that printed yesterday right at support. I think Boeing looks very interesting. Twitter, not only is it down into its gap support zone, which I think is a good thing, but also on the weekly chart on Twitter, look at the 20-week being tested here. That has been a strong support area during this uptrend. So I think Twitter looks interesting. The last one, most of those, you're probably pretty familiar with those stocks, but I also like Splunk, and I love the name Splunk. But here you can see it has come down into this gap support zone, pretty close to price support on the 50-day. And this one, you know, I go back to my last. The PPO rolling over, you got a failed price breakout, and that usually is trouble. And in this case, you can see it was a lot of trouble for about 6 trading days. But I do like this potential reversal from the 50-day moving average. And with that, I'm going to turn it over to Erin. I know she's got a couple upgrades and downgrades.
Indeed, I do. We have 3 upgrades today and 1 for us. So let's go ahead. I'm going to start actually with the upgrades, and we'll finish with the downgrade there. I thought all of these charts honestly looked pretty good. The downgrade as well. So I wanted to let you know why. So with BP Amoco, we can see really nice positive divergences here. You've got rising bottoms on all of these indicators, and price bottoms were mostly unchanged. I mean, it did go up slightly, but that I would look at as a positive divergence. And you can see right now we're trading above this area of overhead resistance. If we get a close above it, I'd be looking at this as a new support line and a target somewhere either at this low, if you wanted to be a little bit more safe. I think it's a great place you would reevaluate if you got up to that 42 level. But I would have a target right there around 44 on this one. So I thought BP looked pretty good. Upgrade for Nova Vax. And this one I thought looked pretty good. You've got the PMO. If you look in the thumbnail, it's decelerating. It wants to turn up above the 0 line. You've got OBV volume. We've got rising bottoms right here in line with rising bottoms on the price. And of course, a very strong scooter. We've got that breakout from that declining tops trend line. I'd be looking for a move to at least test that $2.30 area. So this one could be really interesting, I would say. It's been trading in this trading zone here between 180 and 230. So I do see it at least coming up to test that area. We now are going to look at Yandex. And I didn't annotate this one. Setup here, you've tested that area of support, actually went down and had a false breakdown, and now it's heading back up, and it is about ready to trade above, well, it looks like it's trading right about that 50-day EMA. So I think that's very positive for Yandex. I would like to see that PMO turn back, because right now you can see it is in somewhat of a negative, pretty much a confirmation decline in the PMO. So I'd like to see on this bounce a move of at least deceleration on the PMO. But I think despite that, it wouldn't show up on my radar, but I think this one looks pretty good. Finally, let's look at a downgrade, Starbucks. I was telling Tom, apparently you need to start buying more there, and you're just not doing it for him. Because right now, it has had a downgrade, and so there are a few problems. You know, you have the volume, OBV has been trending lower, while price. The scooter is still rather healthy and has been moving mostly sideways. So we got the negative divergence on this play right here, and then you can see it was, you know, in a positive confirmation of this decline, and now we're getting a move up, and it looks like we're bottoming here, and it is a bottom higher than the previous one, and so that's a bullish confirmation. I think what's important right now, and it might be difficult with the downgrade, is to get back up into that rising trend channel. But here's some pretty strong support here, I would say, at about 56.50 at these lows from back in mid-20. So I thought this one looked good. I am a little concerned, though, when you see a PMO sell signal, but you can already see it's it's not really interested in moving down quickly. And so I think that could be a good sign. I'd be watching for a possible bull kiss here as it came down, and then it's getting ready to go back up. So those were the upgrades and downgrades that I had. And with that, I think it's time to go ahead and introduce Arthur.
Yes, we love to have Arthur Hill on the show, and he is back with us today, and I know everyone's excited about it. Welcome to the show, Arthur.
Hey, thanks very much. It's good to be here.
Yeah, are you a Starbucks fan?
I am, but unfortunately, the Starbucks are only in the major cities in Antwerp and Brussels and Ghent, a less major city.
Okay, I got it. Yeah, that's almost, for me anyway, a downgrade of Starbucks is blasphemy. Yeah, I read the downgrade, and I think they downgraded it from a grande to a tall. Is that what it was?
Oh, there you go.
But
I know how they talk about we have comedy in this show. It's pretty lame, I have to say, most of the time.
Hey, I resemble that.
Well, yeah. I do admit when I am in the U.S. on business or a visit to family, I do hit Starbucks every single day, sometimes twice a day.
Yeah, I actually remember the last time, you remember we were out in wine country.
Yes.
For the last ChartCon, you remember?
Yes, I do.
Do you remember what we did? We took a trip together.
Starbucks, and I drove one way and you drove the way back.
Exactly. Hey, we had some nice cars out there, right?
Yeah. That was really something.
Yeah, they apparently didn't know us very well. But anyway, I know you got a lot to go over, so I'll let you get started. What do you have for us?
All right. And feel free to jump in, if any interesting questions pop up. So you've seen kind of what I'm going to talk about here. So since it's first is scanning for relative strength, I'm going to jump over to a scan. And what got me thinking about this was I was looking at the monthly performance. And so if you look at SPY for the month of March, it is still down for the month of March around 3%. But if you look at IJR, it is up for the month of March. So it is outperforming and showing some relative strength. And basically we had 21 trading days in March. And I don't know why that opened. There we go. We'll go back to this. And so I ran a scan to see which stocks or sectors were up over the last 21 days because they would be showing some relative strength and absolute strength in March. And this is the scan here. You can see I put all these different groups there, and you can comment these out by putting 2 forward slashes like I did on these first ones, because I'm just going to scan for my chart list that has 18 sectors. It's got the 9 sector SPDRs, it's got the 9 equal weight sectors, and it's got the 9 small cap sectors. And that kind of gives you an idea of who's leading and who's lagging. And I just want the 50-day EMA to be above the 200-day long-term uptrend. And I would like the close to be above the 200-day EMA as well. And then I want to rank the results by the 21-day rate of change, which is, and I'll get a new window and I'll see the sector leaders and laggards in the month of March. And look who's at the top, small cap sectors. If you look at the rate of change, which you're ranking by on the right-hand side here, you can see that small cap healthcare is up like 4% for the last 21 days. And I will go back. Yes, I'm 0 trading days. So I'm scanning on the current day. Sometimes I have an old scan and it's like 10 trading days before. So you have to check that. But small caps, the small cap sectors are leading. Industrials are up 2% for the month of March. Small cap financials up almost 2%. Laggards. Now, these are the laggards that are in uptrends by the moving averages I put in the scans. So you can see industrials lagging a bit, but technology and financials, they're kind of the two lagging sectors that are in uptrends and they're large caps. So this is telling me that maybe small caps is where we want to position in the market if we're going to get a rebound. So I'll move to the second part of this presentation, and that is with the charts here. So you can use the percentage above the 50-day EMA to rank indexes and sectors to see where the strength and weakness is as well. And these are, it's a really nice indicator set we got from Decision Point. And this is a chart showing the percentage of stocks in the S&P 500 that are above the 50-day EMA. And the green zone marks a dip below 30%. And you can see we've had a double dip here in February and March. And we're currently at 23.6%. And then mid cap, S&P 600 small cap. And right away, you can see small caps. The percentage of stocks above the 50-day is at 36.83%. And that is more than in the S&P 500. So that right there tells you there's more strength within the S&P small cap 600 than within the S&P large cap 500. And mid caps are a little bit stronger than large caps, but less strong than small caps. And then techs, of course, really took it on the chin. The NASDAQ percent above, NASDAQ 100% above the 50-day EMA is down around 16%. But still, this is oversold territory, that green zone. And I still think the market is we're in a bull market. I don't see a bear market. So that means the pullback that we've had over the last, we've had 2, February, March, is part of a corrective period within that bull market. I don't see enough evidence to suggest we're in a bear market. So this next chart shows the percentage of stocks above the 50-day EMA for the 9 sectors. All right, and you can see which sectors are a little bit stronger, which are a little bit weaker. You could rank these because you can see the numbers on the right-hand side. So utilities are the strongest by this metric. But personally, I don't like utilities because I look at the chart and I think it's broken because 50 days below the 200-day. And I think there are stronger charts out there. But, going down, you can see consumer staples around 20% are above the 50-day. This is industrials around 20%. So these are 2 sectors that are holding up fairly well. And then you get down to materials, they're one of the weaker, 12%, financials, 13%, energy, 12%, and then consumer discretionary, 20%. So they're one of the stronger sectors. Now here's small caps. So whereas the S&P 500 broke below this low here, you see from early March, small caps held above it. All right, they did get hit with the rest of the market, but they also almost made it back. Well, they did make it back to this January high, whereas the S&P fell short, and of course QQQ moved above it. But we have a potential higher low taking shape here, and so if we can get a breakout at 78, that opens the door for a break to new highs for small caps. So that's what I'll be watching next week. Now, this next chart shows 4 major index ETFs to kind of give you a comparison on one chart. We've got equal weight S&P 500, and you can see a lower high and a wedge break. Okay, that is negative, definitely. And we can see the same thing in the S&P 500. So right now we've got some bearish chart signals that happen in March. We're trying to stabilize here. And then this is the mid cap ETF, pretty much the same thing. And there's small caps. Almost made it to that high and held above that March low. So this is one of the stronger parts of the market right now. So moving to some industry group ETFs, I've got 3 that I would like to point out. And when I look at a chart, the first thing I ask myself is it broken? All right, is the uptrend broken? And if I look at ITB, man, it had a heck of a run here from August to January, up like 42%, a new 52-week high. And this was just a sprint, basically, for 5 months or whatever. And then it got hit really hard with the rest of the market. And then it underperformed during this February, early March period because it couldn't make it above this February high. So the S&P was doing this and ITB was doing this. But now we've got ITB holding above so far that early March low. So we got a little bit of early relative strength. I don't have much absolute strength to talk about, but I do think ITB is up for the month of March. So for March, it's holding up a little better. And so got a little wedge here. We got a little bounce, maybe a little wedge correction, and you get a breakout there at 40.5. That's your first sign to watch for ITB. That was supposed to be the slide before this, but it's okay. We can adjust. Here are broker dealers. Now, this one was hit very hard as well, almost down around 10% from 70 to 64. But is the chart broken? Well, I would say no, the chart is not broken because we're still in an uptrend. All right, there's higher lows and higher highs, and we're coming into a support zone. It kind of looks almost like QQQ in that it's coming into this support zone here. So this is one I'd also watch for a bounce. And there you can see RSI becoming oversold with that dip to 30. And aerospace and defense, I think it is still one of the strongest groups out there because it had a 52-week high here, just edged above that high there in early March, kind of a wedge, which I think is a corrective pattern. And if we can break out of that wedge, that opens the door to new highs. But I think this is one of it held up quite well during the market turmoil. So now oil. Yeah, oil is a bit of a conundrum because you've definitely got an oil, but man, XES and XLE just do not look good. So first we've got oil, and this is USO, and clearly an uptrend. And then consolidation within the uptrend and a breakout and holding that breakout. So oil looks like it wants to move higher. This is West Texas Intermediate down below. So as long as it holds above 60, I think oil is in a nice, strong uptrend. So with oil in an uptrend, and I keep coming back to XES and XLE. If oil was not in an uptrend, I wouldn't even bother with them. But the fact that oil is in an uptrend keeps me looking at these charts, and they keep just going nowhere. So I ask myself, is this chart broken? Well, it was broken back in the summer, and then it broke out here, and you had this inverse head and shoulders, and it was looking pretty good. And then it came all the way back down below the neckline breakout there. But there's a chance that this is a correction because it's trying to stabilize around the 61.8% retracement, Fibonacci retracement. Retracements, I'm looking for anywhere from 1/3 to 2/3. And in Fibonacci terms, that kind of is roughly 38 to 62%. So you get into this area and you start stabilizing and you go on alert for a potential bounce. And, on the chart, you need a breakout here to reverse out of this consolidation. We're getting a bullish failure swing in RSI. And this happens when you have a move above 30, a dip, and the dip holds above 30, and then you break above the prior high. So if RSI can get above, say, 60, that's going to confirm that bullish failure swing in RSI. Don't use divergences very often, but this is one that I would watch. And actually, I should say that the bullish failure swing in RSI is completely independent of price. In other words, you don't need a bullish divergence, which you do have one here, but you don't need that for the bullish failure swing in RSI. If you go to his book, Wells Wilder's book, he explains it all very well. And then you have XES, XLE, which kind of looks the same. Had the breakout, the big move, and then boom, hit hard and trying to stabilize here. But, with oil above 60 and oil very close to a 52-week high, you got to wonder something's really wrong here in the oil patch as far as XLE and XES is concerned, because they're not reacting to oil. So that's kind of a red flag right there. So moving on to page 2. I think we got some duplicate slides here, and I think I've come all the way around. I do have a few individual stock charts that I wanted to highlight because I was looking for stuff that was holding up. And you look in the energy patch, and you can see that Anadarko Petroleum does not look like XLE, does not look like the energy sector. The energy sector is back down near these lows. But Anadarko has it like a triangle consolidation here, and it broke out. It fell back after the breakout, but this is one of the stronger energy stocks out there. Go to now this one looks just like XES or XLE. All right, it's a little bit stronger because there you can see that kind of inverse head and shoulders pattern, and then there would be the neckline, and you had a breakout, and you're kind of back to the neckline. So this is a good spot to hold and turn, and you have a resistance zone around 48.49. So that's the level to watch for a breakout in Halliburton. The XES, the Oil and Gas Exploration, Oil and Gas Services and Equipment ETF. Danaher is an industrial stock, and it's got a big symmetrical triangle working here. All right, you have a peak, slightly lower high, bottom, and a potentially higher low forming. And then you have swings within this triangle, down, up, down. And instead of waiting for the breakout at 105, I would be watching the swings within this triangle. And if you get a breakout at 99, that would reverse that downswing within the triangle and then argue for a challenge to resistance up there. Fluor. Now here is an engineering company that is part of the industrial sector, I believe. And it was one of the worst performers in 2017, but then really took off. And We have what could be a triangle or a wedge, but basically it's a consolidation after a massive advance. And I'd be watching for a breakout there around 59 to signal a continuation of that uptrend. We're doing all right on time, guys?
Yeah, I think we still got a few more minutes. So let's, I think this is really interesting to see some of these stocks that you're pointing out that are performing very well for the most part on a relative basis. So keep going. You got a couple more minutes.
Okay, I got a couple more. We got Intel. So, all the big techies have been, not all the big techies. And Intel, of course, is not into social networking. They're supplying the guts to the social network, if you will. Or the hardware, but still a nice uptrend here. That's a 52-week high. Yeah, it's getting choppy here, but I would think this is some sort of a falling flag-like consolidation. All right, and higher. This is still a strong chart. Microsoft is still a strong chart. All right, there's a 52-week high. It fell back below the 50-day EMA here, but did here as well. But this is some sort of pullback within an uptrend, I think. I mean, that's basically my main premise. What's the big trend? Okay, the big trend is up. All right, if the big trend is up, then this little trend is a corrective move. This support coming in here. You have a kind of a broken resistance and this low. So 84, 86, and you're just above it. But I would expect good things out of Microsoft. Now, Boston Scientific. Now, admittedly, this is one of my more iffy charts because you can't see a well-established uptrend here. All right, it's kind of like XLE and XES. Had a nice uptrend here and then got slammed. All right, but now it's trying to battle back. And what caught my eye was it kind of held this early March low. And also I was looking at medical devices ETF, IHI, and it looks like one of the stronger groups as well. And Boston Scientific is part of that group. Centene is part of the healthcare sector, and it held up quite well in the March decline. It held above that day. So I think this one is still on a nice uptrend. So I'd expect that to continue.
Do you have a favorite, Arthur? I mean, I know you've pointed out a number of great stocks, but would you say that any of these would be your absolute favorite?
Well, I would say Microsoft, Centene would be a favorite out of these because they are in long-term uptrends. Intel as well.
Of course, part of that software group, which has been so strong, on a relative basis. It's easier to outperform the S&P 500 if you're in an area that's outperforming the S&P 500.
Yeah, and I'm sure Microsoft's a pretty heavy weight in that group as well.
Yes, yep.
Yeah, and this is another one trying to turn the long-term corner, advanced auto parts. You can see that 50-day just getting above the 200-day EMA and a symmetrical triangle taking shape. And then another one that looks strong, C.H. Robinson. You can put this one as the fourth one. Nice, strong advance here. And I thought it held up quite well in March. And it's above the 50-day EMA holding that. So I would expect that uptrend to continue. I mean, that's the basic premise. A trend in motion is expected to stay in motion.
Yeah, this actually would probably be a good time to transition over to the seasonality, which I was going to talk about in just a couple minutes. But CHRW, its best month seasonally is April during the year. So, of course, we're having more confirming signal, I suppose, that, if you drag it across, 4.6% it averages during the month of April, and that's by far its best month of the year.
Wow.
Now, half the time, but you're in a pretty, as you pointed out, I think you're in a nice bullish pattern. I would expect it to move higher, especially if the market does, and knowing that it does average that kind of a gain over the last 20 years, I think just adds to maybe the confidence of the trade.
Absolutely. The indicators you can pile on and get a confirmation on, the better.
Yep, absolutely. Well, I mean, first of all, I want to thank you for, everything you presented here. I think it gave everyone a lot of information and a lot of things to consider as we head into April. Were there any questions? Any, I don't know if you looked in the room, Erin?
Yeah, there's one. I'm not exactly sure what they're getting at, but maybe you can decipher. But it says, please ask Arthur Hill about the best 6 months, worst 6 months MACD sell signal on the S&P and Dow.
Well, sure. You got about an hour?
I know, right?
Actually, I did a system trader article on that specific topic. And if you search system trader, then you can go to blogs down there. And from here, we could do seasonality, I think. There is an article on the best 6 months, tweaking and adding MACD. That's from 2016, but you can read that article for more details on that.
Perfect.
But basically, long story short, I found that the 50-day, 200-day cross is just as good.
Nice.
You're pretty good. An article about it 2 years ago. I can't remember to get the trash. I can't remember to get the trash out on Thursdays. Anyhow, that was a great presentation, Arthur. It's always a pleasure to have you on the show, and really looking forward to seeing you later this year.
Absolutely, looking forward to seeing all of you guys and girls.
All right, there he goes.
Always. All right, have a good weekend, y'all.
Yes, you do the same, and enjoy your Easter weekend, and we will definitely have you back on the show. Every time Arthur's on, we get all kinds of comments. Why don't, let's get Arthur on every week. And I did actually forget to mention, but Arthur's going to have his own show coming up on the 24/7 Stock Charts TV. When does that start, Arthur?
I'll be starting the second week of April.
Okay. And can you give everybody just a quick, is it how long is the show and what will you be talking about, kind of a thing?
Well, the show is going to be, we're going to start off with 30 minutes.
Okay.
And it's basically going to be focusing on the trend and looking at, charts to figure out if they're broken or if they're not broken. And I'm also going to add my own take on some classic patterns and some thoughts on classic technical analysis. It might go against the grain of some of the books, but it's just something, we all adjust as we evolve in the world of trading and technical analysis.
Hey, Art, maybe you should throw in some RRGs while you do that.
You just
hey, Julius.
guesses.
Mystery guest. You came in early, mystery guest.
That's true. I was forced to.
It's good to hear from you, Julius. We are gonna hear some more from Julius right after we get through the market update. But I do want to go through seasonality here for just a few minutes. Some things maybe to look at. But again, thanks so much for stopping by, Arthur. Look forward to your show.
It's going to be on Tuesdays at I always get these Eastern times messed up, but it'll be on the schedule.
Okay. All right, cool. I think it's awesome that you got
Tuesday morning.
Okay, Tuesday mornings. All right, so we'll be on the lookout for that. Now, I can't wait to see your show get started there. A lot of great information I'm sure you'll be sharing with your audience. Guest that will be coming up shortly. But let me, I want to talk a little bit about seasonality. So, first of all, seasonality is not my primary go-to. I don't typically buy a stock or an ETF based on seasonality. It's as Arthur was saying, it's another tool. It's something else that you can use that may support your trade. If it doesn't support my trade, if I like a stock and I happen to look in April and I see, well, historically it doesn't perform that great, I still will buy the stock. If the technicals are telling me to buy it, I'll still buy it. It's not an overpowering kind of a signal for me, but I do really feel better if I like a stock and I look and the seasonality lines up as well. So I want to just go over a couple things real quick. First of all, April 1st to the 18th, this is like a pre-earnings season run-up that the market typically experiences. Over the last 68 years on the S&P 500, dating back to 1950, April 1st to the 18th, the S&P 500 has produced 28.12% annualized return over those 18 days, going back the last 68 years. So typically throughout the year, the S&P 500 rises 9%. During this period, these next 18 days, it's 28.12%, which is more than triple. So the tendency is for the market to rise as we head into earnings season. That's true of every quarter, by the way, not just April, but I wanted to give you those April numbers. The NASDAQ, those same 18 days, up an average annualized return of 20.45%. And the Russell 2000 during these 18 days. That's the Russell 2000's annualized return. I also had written a blog. I wanted to point this out back in January of 2017, January 7th. Anytime I start talking, relative strength on a seasonal basis, I like to go back to this article. You do have to update it, and this was done over a year ago, so these numbers will change a little bit. But what I've done is I've looked at each of the ETFs and how they perform relative to the S&P 500 by calendar month. So, for instance, in April, you can see industrials and financials tend to do extremely well, as does energy and materials. And I find this one interesting because I just talked to Art, and Art was saying that energy, being down near that support level, we could see a move from here, and history supports that notion as well. We tend to see some pretty strong outperformance by energy during the month of April. Now, the way you would actually see that on a chart is if I went in here and I typed in seasonality and we pulled up the XLE. Now, there's two ways to do this, but here is what the XLE tends to do over the last 20 years. You can see the average return on the XLE, 3.4% in April, the best month of the year. So historically, we are entering a strong period for the XLE. The other way, and the way I was showing that, is you can compare it to the S&P 500, and the default is 5 years, so I stretched that out to 20 years. And you can see that during the month of April, the XLE has outperformed the S&P 500 68% of the years, looking back over the last 20 years. And it is averaged outperforming by 1.6%, which again, on a relative basis, the strongest time of the year, strongest month anyway, for the XLE on a relative basis. So are the two strongest on a relative basis. So I'll pull up the XLI versus the S&P 500, and you can see 63% of the time it goes higher than, it moves up more than the S&P 500, and it averages outperforming the S&P 500 by 1.6% over the last 20 years. So those are the two best. I won't pull up the charts here, but I can tell you the two worst on a relative basis are the consumer staples and technology sectors, the XLP and the X. Or if you go down to your chart list, you can change the view as here to seasonality. So for instance, on the Dow Jones 30 stocks, when I do this and pull up seasonality, I can then take each individual stock. This is the first one that comes up, Apple, and I just drag it over, and you can see Apple has pretty good, decent April, but Apple has good months just about any month throughout the year. I mean, it's been a great performer over the last 20 years. But I wanted to point out a few of these, and then by the way, you can just click through your list, click next, and the next one, but again, it's the default 5 years. So you drag it to 20. Look at American Express, AXP. 84% of the time, AXP rises in April with an average gain of 8.7%. This is a stock that historically does extremely well during the month of April. I think that's worth noting. I'm just going to mention a few others rather than go through and spend a lot of time just pointing these out. But Boeing, Caterpillar, Disney, Dow, DuPont, Intel. I'll pull up Intel because I think Art was talking about Intel earlier. So let me pull up the seasonal on Intel. So if you like the chart, it's always nice to see that 79% of the time Intel goes up during the month of April, and it averages going up 3.9% over the last 20 years during the month of April, and that trails only October in terms of its average returns. So Intel strong, 3M and Visa. Those are the 8 top stocks in the Dow Jones when you look at April performance. A couple of not so great, Home Depot. Let me pull up Home Depot. And then Nike also tends to struggle. Look at the May and June. You would think you're into the spring season, maybe a lot of fix-up projects, but that doesn't translate into stock performance for Home Depot. April's not bad, but then May and June really start to turn pretty ugly from a seasonal perspective on Home Depot. The last individual stock I wanted to show you is Nike. Nike does extremely well in the last 4 months of the year. Not so much in April. May and June, things tend to... Historically speaking, we don't tend to see a whole lot of performance or outperformance by Nike as we head into April. But check out the last 4 months of the year. That's a great average return. If you add those up, 8, 7, 10, 8, 13.7% Nike averages going up the last 4 months of the year over the last 20 years. That's important to know. And then the last thing I wanted to mention was just the individual industry groups. I do want to point out autos. I brought that up on a show not too long ago, but this is just a crazy seasonality stat on autos. Check out April for autos. Goes up 70 and average is going up 9.3% in April, whereas if you take all the other 11 months and add them together, it's minus 5%, minus 5.2 or 5.7 or something like that. But 9.3% average gain in April. So autos are something maybe to take a look at. The other the other industry groups, gambling stocks, which is the DJUSCA, truckers, DJUSTR. These are the 3 best stocks and truckers. And then the worst, some to avoid or maybe be a little careful with, airlines, DJUSAR, and computer services, DJUSDV, part of the technology space. So with that, I am going to summarize for you the seasonality, some of the things that we just talked about, and hopefully that...
it's a pretty, there's a lot there that you covered. So I think, I'm not sure the blog today after the show.
Okay, perfect. Well, let's move on to the 10 and 10 because we got to hurry up and get to our mystery guest who's no longer a mystery.
Exactly. So I'm going to share my screen. Let's get going. Oh my goodness, we had so many requests today. All righty, let's get it to where we need to. Google, there we are. So here's our today's 10 and 10. Right now we have 36 typical view that we got today. And I thought I do RRG, but it's so messy when we have that many charts. So I thought I'd try a market carpet just to see what we got here. And as you can see, most of the interest are in, are having good days, of course, right now. Only a few are down. These are the bottom 5 as far as changes on the day in price. And so it's pretty interesting at that, looking at that. I think there's a way to do it. Well, I'm not a market carpet person, but okay, here we go. Let's take it out just a little. And look at how the red goes after the last week. So I suspect when you look at it, we do have quite a few of the tech stocks in there. and NASDAQ 100. So anyway, let's get started. RYAM is the first one.
Okay, RYAM. I had not annotated it yet, but let me go ahead and show you the chart. I love the breakout here. We had a false breakout yesterday. That might have been enough maybe to convince me. Losing breakout, which I think would be more bullish. Could use a little bit more volume on this, but let me annotate. And what I would do is just kind of draw. Whoops, that's not what I wanted to do. Let's grab the auto support resistance line. You can see the last high here, which was in early March. We went above that. On heavy volume failing to move. EPO is rising, so we are definitely building a little bit of price momentum to the upside. We're getting the breakout today. I'd like to see more volume coming in because we are at about, well, we're just past the halfway point of the day, and volume is much lighter than we've seen the last couple of days. But a strong finish would certainly help here. I like RYM. I think on a relative basis, this is what Arthur was talking about earlier. Given all the weakness that we've seen here, you've got a stock that's making a breakout. I think that's very bullish.
Yep. Ooh, I'm going to add this one to my watch list. All right. So the most popular request for the 10 and 10 from our chat room is Micron, MU. And we haven't looked at this one for a week, so.
Okay, I actually did buy Micron, so that's probably what's holding it back today. I talked about this when when we were up at that 60 level and it gapped up 50, and that we could see a move down to 50. I still think we could see 50 on this pullback, but I think as you get closer to that 50 level, the reward to risk is really starting to turn in favor of being long Micron. So I think that the selling was needed. We had a huge move up on Micron. I mean, we're talking about from the low of 38 to a high of almost 64 in a month. I mean, that's a 70% return in 1 month. So the stock definitely needed a pullback of sorts. And we could probably even, let me grab the Fibonacci. And if we go up, you'll see it's back to about 50% on the Fibonacci right now. So you've got price support at 50, and then you got the Fibonacci 50% support zone, both coming in right at around that 50, 51. I bought yesterday. But I think that the stock looks good, and I think as you get closer to $50, your reward to risk gets even better.
All right. Let's see. Let's do the one and only request from consumer staples sector, Kimberly Clark, KMB.
All right, I'll try to pick up the pace here. You've got a couple overhead price resistance levels, and we are challenging. We hit that 50-day. I don't like the candle so far today, but you can see that 115 area was way off of the selling after we had set a new high up here. We came down selling, rallied back. That was the initial high. Here is your second high. We had actually a double top right in here at about 113.5. So I think that's a key zone. And you can see we actually started, the selling picked up when we got to the 50-day. So I think there are some issues on the weakness that we saw last week. So I'm not a fan, especially off of this rally. I would be careful with it.
All righty. Let's see. The next one was requested as Sometimes I Feel Like a Fossil. So we're going to look at Fossil, F-O-S-L.
Yeah, I actually owned this one before and made some money on it and then got out. It's part of a good group, and it's picking up, and I like the volume starting to pick up. It's hard to see the volume picking up because of this huge volume bar over here, which came up with earnings and the gap up. But I thought Fossil, which was down here at, well, just below $11, didn't quite get there. And I think it's starting to make a turn back up. I think in the short term, you'll probably run into a little resistance at about 14. After we went down, you can see all these attempts trying to get through 14 before we fell back down. But I think that overall, FOSL looks good. I think it's in a great group. But maybe in the short term, it could run into problems when we get up to that 14 area until we see a breakout.
All right. Next one I have for you, Abby. In that space, you like biotech.
Yeah, well, it hasn't been performing so great. The stock itself, I don't like that heavy volume breakdown. I'm going to go to a weekly chart and just see if the weekly chart looks any different. Yeah, no, that's a lot of volume breaking down below that rising 20, and you can see that had been holding for a while. So I think for me, this has been an outperformer for quite some time, but I don't worked. And so that right there, losing the 20-day moving average on this kind of volume is not exactly exciting to me. You can see this long tail over here down to 85. I think you might get a break here when we get down to that 50-week moving average, but I'd have difficulties buying it at the current level.
Okay. Next one for our Canadian friends, OSB.TO, Norboard Incorporated, from the materials sector.
All right. Yeah, nice looking chart. I think it's in consolidation mode after that October high from back in, and I'm talking about the longer term weekly chart, but you can see a clear uptrend in play here. And sideways consolidation. Here was the pullback to the prior high. So that is your price support level. That held, which I think is bullish. Came down, tested it, and you can see we came down to about that 50-week moving average and then started to strengthen again. So that's why on that previous stock, I'm still giving it hope when it gets down to the 50-week moving average. That was ABBV. But here on OSB.TO, I like this move to the upside. It looks like we're trying to move back up above it. I am looking for a test of the 50 area to go back up where we were in October. And because again, I'm more short term, and that is overhead resistance. But I could see maybe a pullback to that rising 20-week moving average. But at that level, I actually like it. I like it on a 20-week test.
All righty. Next one is CORR, CORR. And that is in the...
Okay. Well, I'm probably not a big fan of the group, but this stock actually looks pretty good. I like the breakout in March, taking out the top that we saw in January. That's a positive. Let's see. There's that high. And I think all it did is after making that breakout, had a false breakout. We came back down, went one day a little bit below the 20-day, but that has actually been pretty good support. I would expect it to continue back up and test that 38.50, 38.60 level. Longer term, is it a huge mover? No. If you're looking for a huge gain, this is not a stock I'd be looking at, but it has been a pretty decent performer, and I think we'll get back up to that 38.60 area probably in the near term.
All righty. Next, love the symbol FUN, FUN, for Cedar Fair, recreational services.
All right, FUN. Yeah, well, hasn't been fun for the last month, a little over a month, maybe 5 weeks from the top. Of course, again, we're talking about a market that's been weak. I think it's down close to support. The two key areas of support that I see are the most recent lows, which right there, you can see multiple tests around 64, and then the double bottom 63. So I think in this trading range, 63 to 64, the stock makes a lot of sense because it is, you do have $6 from that level. You have about $6 up to resistance, and you can keep a fairly tight stop. And I might even drag this down just a little because of this gap support right here. So just below that double bottom is gap support. So let's call it 62.5 to 64 as support.
Okay. Let's see. The next one is the Malaysia ETF.
Well, I think it's a bullish looking possible breakout here. All the consolidation really helped to get the PPO back down to the center line, and it's starting to move higher again right here. You can see it's just starting to turn back up. So a breakout here, I think, would be fully supported by the PPO. Now, whether or not we hold this into the close is another story. But even if we don't, I really like the setup here, and I expect that if it does fail and pulls back, the rising 20-day should offer up great support.
All right. And our final one, and I do have a funny story about it, but I'll hold off on that. But Tesla, TSLA.
Reversal here. I tell you what, there's a lot of jockeying right now on Tesla. A lot of shares have changed hands in recent days, and you can see huge selling, a big breakdown. I'm going to actually pull this one up on the weekly chart because 280 was a big area of support, and we did fail. Well, it looks like we're going to fail to hold 260, which is the double top rate, or excuse me, 280, which is that double top right there coming across, really almost a triple top before we got the breakout. Unless we have a really strong afternoon, this weekly candle is going to break down below the 280 support level and on very, very heavy volume, even though it's only 4 days this week. This is going to be very big volume for Tesla. So I've got issues unless it has a really strong rally into the close today from a longer term weekly perspective. You know, waited and waited and waited. This is a stock actually I was looking to buy at 280, but it went down on such heavy volume and gapped below that 280 level. I'm just kind of watching to see whether or not we can, rally to get back up above that level. But it's still got $17 to do it in only a few hours. Not to say it can't happen, but I'd be looking at this more as a breakdown than an opportunity.
All righty, and that concludes the 10 and 10. Quick Tesla story is I had a Lyft ride and I was like, ooh, it's going to be in a Tesla. Got in it and it was like this dreamboat guy, totally wasted on me. And then he turns around and he has an Irish accent on top of everything else and wasted on me. But I liked the Tesla. That was
You had an Irish accent?
Yes. It was an Irish brogue or whatever. It was just so funny because I looked at him at first, you know, I just rushed in the car and he turns around with his sunglasses on and his scruffy beard and his dark long hair. And I'm like, looked up and I'm sure my mouth opened. And he was like, oh, you need to buckle yourself in. And he's got this accent. And I'm like, and then we listened to.
Oh, there you go. And I tell you what, we've got our special mystery guest with us. So this will be perfect to talk a little ChartCon because Julius, you'll be there with us. I can't wait.
Yeah, me neither, Tom. I'm really excited to go there.
Yeah, you should. Did you see where they placed you in the lineup?
Yeah. We talked about that the last time. I now know what the closer is.
Yes.
You're the closer.
There he is.
Oh, wow.
It'll be a great time for us, especially because we're going to be there in person and you can be as well. But it's going to be a great time. I love catching up with all of you. And if you want to join us in on that fun reunion, you can be a VIP to ChartCon for the weekend. And here's what you can get with that. And if you want to really spice it up, you can join us all on the cruise that we're going to take afterwards to Alaska, and you can get even more time with us. And like I said, we don't hide out. You should be able to catch one of us somewhere out and about. So
yeah, does that offer for the cruise, does that end? Yes, there you go.
It ends this weekend. I have no idea if they're going to extend the registration past that because I know they have to get all the information for the cruise put together. So if you are thinking about doing it this weekend, this is it, guys. To talk your significant other into going to something like this. You can add in the cruise. So just I'm really looking forward to it. I know you are too, Julius.
Oh yes.
All right, so I am going to go move us quickly into a very short market update just to let everybody know what's been going on while we've been having so much fun chatting here. And as you can see, yes, the markets are their move up. I've noticed now that we're seeing some consolidation, and in the Dow we're actually seeing a little bit of a pullback here. But I would look at these more as intraday flags. So I think there's certainly some opportunity here for a move even higher at the end of the day. And you can see Wilshire 5000, same thing. Treasury yields have been creeping downward, as we were saying, currently reading 2.743. And we've got UUP virtually unchanged, but gold we're seeing is lower. And again, I pointed out before, we've been seeing not just the conversion, you know, as far as UUP being strong and seeing a pullback in gold, we're actually seeing more sellers. We're seeing, you know, you have no change here, but but gold is down, reading at 125.38 for GLD. The VIX is traveling lower, and we're now getting readings right around 20, 21. So while elevated, it's certainly not the fear factor we've been seeing earlier. And with that, I'm going to end our market update so we can give Julius all the time he certainly deserves today.
Yeah, what do you got for us? This is a nice surprise, Julius.
Yeah, it's a surprise for me as well, Tom.
You're at the mothership. You're out in Seattle, right?
Yes, I actually arrived like an hour ago, so I'm still fighting off a little bit of a jet lag after a 10.5-hour flight. But I'm good. I'm still good. So,
all right. Well, you can't go to sleep until we get through the rest of the show.
No, that's right. I'll make it another, what is it, 20 minutes? That should be fine. That should be fine. Well, I didn't prepare anything, but the guy said, "There you go on the show. You're a mystery guest, and they'll like it." So while you were talking, let me try to grab the screen from you so I can show you a little bit of what I've been trying to prepare while you guys were talking. You were talking about some of the sectors, and Arthur was talking about some of the sectors as well. And I liked what Arthur was doing on the combining the small cap and the main sectors. For that, and you can actually it pretty much matches what Arthur was showing on the scan. And I think that the RRG, when you pull up the RRG of those small cap sectors, it gives you a little bit more of a visual perspective of the rotation that's going on. If we go back to the sector, and I think there are 2, maybe 3 sectors that really stand out. And the first one, obviously, is XLU. And I know you've been talking about it, Tom, so I'll try to get into that. And don't worry, I'm going to back up your story there because I agree with you. And then we have XLE, which is going straight. And then XLK, despite the selling and all the rumors that are going on, and you know, there's a lot of talk about XLK and big tech selling off, and then it comes back and it bounces all over the place. But if you look at the RRG, it's basically still the only sector that is pointing at a positive RRG heading inside the leading quadrant. So I'm still good with that one. Now, as I said, I didn't prepare a lot, but I can show you how we can actually take this picture of the weekly RRG and play around with the dailies and the weeklies to make up our mind. And if we start with XLU, it's inside improving, but if you look at the level of XLU on the RS ratio scale, it's way to the left. It's actually the weakest sector in the universe at this time, and it still is, despite this momentum-driven rise. Now, if we switch to a daily RRG, then you will find XLU in the top right-hand corner. So this rotation, this recent rotation for XLU shooting into the top right-hand quadrant is causing the upward move on the weekly, pushing it into improving. Now, you already see that XLU is losing relative momentum on a daily scale. It's starting to roll over a little bit. And if you compare it to the levels that we see in the rest of the universe, it's at a very high level. So you have to question yourself, is there enough fuel behind this sector to drive it even further on that daily scale? And the same question you got to ask yourself for the weekly, where you find XLU in that top left-hand quadrant, still pushing higher. But you don't need a lot of imagination to figure out that for XLU to actually completely make the move towards the top right-hand corner, that takes a lot of fuel. That takes a lot of relative strength. That takes a lot of upward price movement. And with the daily already inside leading and rolling over, which very likely means that it will roll over through weakening and then, you know, complete the rotation, that XLU will not be strong enough to complete that journey and reach the leading quadrant. So my take on XLU. I've got that one here. Then we see that, you know, it's been breaking a few trend line support levels, and it's now actually this old support line is now being tested as resistance. So overhead, there is a lot of resistance for XLU. I don't think this sector is going to shoot for the stars. As a matter of fact, I think that it's going to find a lower high sometime in the next few weeks, probably. And if we switch to the relative chart and the RRG lines, we see a similar picture. It broke horizontal support on the relative line. It's now pushing against that former support level, acting as resistance. And you see that that RS ratio line is at the lowest level of the last 5 years. It's been picked up a little bit of relative momentum, but I really, really doubt whether that is strong enough to pull that RS ratio line all the way up above 100, which would put it back into the leading quadrant. So I don't think that's going to happen. I think that XLU is now in a recovery rally, and that it will very rapidly find resistance and turn around, which means that on the daily, it will roll over into weakening and back to lagging. And for the weeklies, it will roll over and stay inside improving, roll over and roll back to the lagging quadrant. So for XLU, I'd be looking for selling opportunities or underweight opportunities whenever the daily is starting to drop into the weakening and push to the lagging quadrant. So that's for XLU. That's one of the longest tails on this chart. Now let's go for XLE, which is energy. You see that this one stands out as well. That's a very long tail. It's being pushed into the lagging quadrant with a lot of force, with a lot of relative momentum. If we check out XLE on the daily, need to you know, it's being pushed up, but it's already starting to level off. You know, the RRG heading, which is I consider to be positive when it's between 0 and 90 degrees when you look at a compass, and we're now at almost 90 degrees. If that rolls over and the heading goes beyond 90 degrees, so beyond 90 and 180, it's starting to be more negative, and it's really negative when it goes, which is like XLK is doing like here. So XLE, like XLU, on the daily, going through a positive rotation, but when you look at that on the weekly, we have to consider that daily positive rotation as a recovery, because the big trend for XLE is down. No sign it's going to turn around anytime soon. So I expect when that rotation on the daily continues, the weakness for XLE to pick up and being pushed further into the lagging quadrant, just like XLU. Let's check that one out on a regular chart. Where is my XLE? There it is. Default. And then you see that it's still inside that rising channel. We broke short-term support. We're moving kind of sideways. If we're going to break that support line, let's say that it is around 65, then I think that we can see an acceleration downward, because this will then look like, you know, a flag or a pennant pattern, which would put a target for XLE way down, way below 60. Relative strength, not very strong. It's hovering above support, and the RRG lines are already both angling down at the same time. So for XLE, big trend downward, dailies pointing to a recovery when the daily RRG positions in XLE for the time being. That was the second one. Now let's look at XLK, because everybody's looking at XLK. That's a very popular one. Let's highlight that one. Look at the rotation here. You see that, you know, XLK was very strong. It's been very strong forever. It's been rotating on the right-hand side, which, as you know, is very strong. All these rotations on the right-hand side is nothing else than a very strong relative uptrend that goes through a series of higher highs and higher lows. And we've just completed another rotation, and we're still inside the leading quadrant, which means that relative strength for the sector is still strong, and that relative strength is still being pushed higher by positive momentum. Now, if we put that on a daily, we got to find XLK again. Where are you? Here. We see the opposite of what's going on for XLE and XLU. We see that XLK went through a negative rotation, and it's still going there. So where we had for XLU and XLE a primary downtrend in relative strength and a short-term recovery, I think for XLK, we have a primary uptrend in relative, and we're going through a short-term correction. So assuming that the long-term relative uptrend for XLK is still there, this short-term rotation on the daily RRG gives us an opportunity to look for buying opportunities. And when would I do that? When XLK would roll up again inside lagging and push into improving. That's when I would start to look at buying into XLK again. Now, the problem with being in the mothership studio is that there is a producer right opposite of me holding up a sheet that says wrap up. So that's what I'm going to do. Really, guys, I love being with you. I'll be back more when Stock Charts TV is going to go live. I'll be there at least once a month. I'm not sure what Chief Chip has in store for me, because I'm going to be here for next 2 days and we have a lot of talks scheduled. So you'll be knowing when I'll be back, and I love to do it. Thanks for having me, Tom and Erin.
Yeah, I got a question for you before you go, though. I'm gonna put you on the spot.
No worries.
Would you buy stocks right now?
Probably, yes.
Do you think
selectively, not all of them. I don't think I would buy SPY, but I selectively would buy sectors. Yes, I would.
Would you be a buyer of the small caps based on what Arthur went over and what you were showing earlier? I mean, do you think that's an area?
Yeah, we hadn't seen this one, but here's the RRG for small caps. It looks quite differently, but yeah, this is the weekly. What I like, and I'm just going to do this, shooting from the hip, but I like this financial rotation. It's just like going there, and it's very close, which is good. And the healthcare actually is rolling over, but it's at a very high level. So I would, let's quickly put this on a daily. Oh, we got here. So here is that financials. It's very close to the benchmark, which is a little bit risky because you're pretty much buying the market, but it's angling at the right way. And here is that healthcare sector, and it's already starting to roll over. So when this healthcare sector starts to roll over and point back up to leading, I think that I'll be very interested in buying small cap healthcare.
Okay, cool. Excellent. Yeah, it's always fun looking at the RRGs, and just so everybody understands, when those, when you're going from leading to weakening back to leading and so forth, and it's turning down, it's not necessarily telling us that that particular ETF is going down on an absolute basis. What you're looking at is the relative performance of it versus your benchmark, which you have there as the SLY. And you want to make sure that you have the right benchmark. So these ETFs are all small cap, and of course you're comparing it to that S&P small cap 600 ETF.
Yes. Yeah. Let me add to that. That's one of the reasons that I'm here in Redmond this week is that one of the big plans that we have is going to, do a big wrap up especially for RRGs, but probably also for other areas of the site to have a proper sector dissemination and segregation from sector level to industry groups to individual stocks, all broken down so that the drop down boxes will enable you to just go from XLK and just pull up all the XLK stocks into an RRG and put the right benchmarks on every RRG automatically without having to do that yourself. So that's one of the big projects that I'm actually working on right now.
Awesome. Very exciting.
Very exciting.
Okay, well, we are about to the end of another show. I want to thank Julius for surprising us and coming on the show. Thanks, Julius.
No problem. My pleasure.
look forward to seeing you again soon, and really can't wait for ChartCon. That's going to be awesome, getting back together with everybody. And yes, I guess Erin, I'll let you take it away with the
Yes.
with the announcements and all.
Yes, we need to look forward to next week. And you'll see that we have, well, we'll bring up that schedule shortly. There it is. And here's tomorrow, because we do have that day off on the market. Stock Charts TV 24/7 is going to launch on Monday, with the beginning of it starting on our show. Wednesday, we have our very first female guest, Mary Ellen McGonigal. She does write in our Top Advisors network blogs over there, so you can check out some of her stuff. And I do want to give you a little bit of a precursor, but I just found out my father, Carl Swendlin, has agreed to come on the following week as a guest. So we'll have him soon, which will be great. I love, obviously, talking shop with him. We do it all the time.
Yeah, and that was fun having him on the show. So that I'm sure will be really exciting to have him back that following week.
Oh, absolutely. Just as long as he doesn't embarrass me with stories of my childhood, we'll be all right.
I do want to mention I will be out all next week. So I believe you have Greg Schnell with you all next week as well, right?
Yes, it'll be Greg and I, and I'm definitely looking forward to it. I'll certainly miss you, Tom, because now a lot of that is going to fall on me, but I'll also miss your sense of humor and all for the week, and I'm sure our viewers will.
Yeah, I need to just kind of get away a little and unwind, especially after the last 2 months. So the vacation is coming at the right time. Plus, if my call on the market bottom is wrong, I can be gone for a week and not have to own up to it, at least for another 10 days or so. Anyhow, let's go ahead and wrap this up. I do want to thank everybody for being with us today. Thanks to Art and to Julius for coming on. Remember to complete the survey as you exit. We do love to get your feedback, to hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. Enjoy the long weekend. And Erin and Greg, we'll see you back here on Monday. Happy trading.